Medicare. IRMAA surcharges can cost you thousands of dollars, but these 8 specific life-changing events can save Medicare beneficiaries from these penalties. Only if you know the exact process and avoid the common mistakes that doom most appeals. If you're paying higher Medicare premiums because of IRMAA, the income-related monthly adjustment amount, you're not alone. About 8% of Medicare beneficiaries face this surcharge, and for 2026, crossing that income threshold by just $1 will cost you an extra $1,148 annually. That's $974 for Part B and $174 for Part D, and that's just the first tier. The maximum surcharge reaches nearly $7,000 per year. But here's what most people don't know. You can appeal these surcharges when certain life events occur. The key is understanding which events actually qualify and following the exact process that gets results. Let me start with the basics. IRMAA operates on a 2-year look-back rule. Your 2026 surcharge is based on your 2024 income. The Social Security Administration uses this delayed system, which creates a major problem. Your current financial situation might be completely different from what it was 2 years ago. For 2026, single filers with income above $109,000 and married couples above $218,000 will pay the surcharge. The standard Part B premium is $202.90 monthly. That's a $17.90 increase from 2025. But if you're hit with IRMAA, your costs skyrocket. The cliff structure makes this particularly brutal. Cross the threshold by a single dollar, and you're suddenly paying hundreds more per month. There's no gradual phase-in, it's all or nothing. Now, here's where it gets interesting. The Social Security Administration recognizes exactly 8 life-changing events that can qualify you for an appeal. Not 7, not 9, 8 specific situations that they'll actually consider. You can find the complete details at ssa.gov/Medicare/lower IRMAA. Number 1 is work stoppage. This is retirement or complete job loss. Danielle Roberts from Boomer Benefits explains, if it's not listed, it's considerably harder to get approved. Then you are fighting an uphill battle. Work stoppage is the most common successful appeal reason. Number 2 is work reduction, significantly cutting your hours and income, not just changing jobs for similar pay. Number 3 is marriage. Getting legally married can change your filing status and income calculation. Number 4 is divorce or annulment. The end of marriage often dramatically affects individual income. Number 5 is death of spouse. Losing a spouse typically cuts household income substantially. Number 6 is loss of income-producing property due to disaster, fraud, or theft. Notice this specifically excludes voluntary sales. The property must be lost beyond your control. Number 7 is loss of pension income when a pension plan terminates or fails. Number 8 is employer settlement payments, one-time bankruptcy or reorganization payments that artificially inflated your previous year's income. These 8 events have one thing in common. They represent substantial, sustained income changes, not temporary spikes or routine transactions. Here's what doesn't qualify, and this trips up many people. Roth IRA conversions don't qualify. Large traditional IRA withdrawals don't qualify. Investment gains and most home sales don't qualify. As one expert noted, qualifying reasons typically involve substantive, sustained changes rather than routine one-time transactions. Barbara Hughes, a retired attorney, successfully appealed twice. Once when she reduced work hours in 2015, then again after retiring in 2020. Her premiums dropped by more than $70 monthly, and she received an $800 refund for overpaid premiums. But as she points out, you don't have to be an attorney to do this when you have what SSA lists as a qualifying event. Let's walk through the exact appeal process that actually works. Step 1. Wait for your IRMAA determination letter. You cannot file preemptively. The The Social Security Administration sends these notices in late fall for the following year. Typically around the same time COLA notices arrive. You have exactly 60 days from receiving this notice to file your appeal. Step 2. Gather bulletproof documentation. This is where most appeals fail. You need official proof of both the life event and the income change. For retirement, bring your termination letter and final pay stub. For divorce, provide the divorce decree. For death of spouse, include the death certificate. For pension loss, show the pension change notice. One successful appellant explained, "I just waited for SS to send me a letter that I was subject to IRMAA, after which I filled out the appropriate form and mailed it in with a copy of my termination letter from HR. My redetermination was approved in a couple of weeks." Step 3. Complete Form SSA-44 correctly. This is the official Medicare income-related monthly adjustment amount life-changing event form. The Social Security Administration estimates it takes about 45 minutes to complete properly. Key sections include your reason for appeal and estimated current income. When calculating your modified adjusted gross income or MAGI, remember to include tax-exempt interest from municipal bonds. This is specifically required on the SSA-44 form. Here's a crucial tip many miss. You can use income estimates on this form. Some SSA representatives incorrectly claim you cannot, but Form SSA-44 specifically allows estimates, and it's stated in their official procedures. Step 4. Submit everything together. Attach all supporting documents and either mail them, fax them, or use the drop box at your local Social Security office. As of January 2025, walk-ins are no longer allowed for IRMAA appeals. If you filed an amended tax return showing reduced income, you can request an adjustment by calling 1-800-7772-1213. Step 5. Wait for the decision. Appeals typically take 30 to 90 days to process, with most successful appeals resolved in 6 to 8 weeks. About 50% of appeals result in lower premiums when proper documentation is provided. If approved, the adjustment may be retroactive. You won't receive a refund check, but they'll credit overpaid premiums to your future Part B payments. But what if your appeal gets denied? You have multiple escalation levels. Level 2 is SSA reconsideration, asking them to review your case again. The success rate drops significantly at this level, typically only 20 to 30%. Level 3 involves the Office of Medicare Hearings and Appeals, or OMHA, where you get a hearing before an administrative law judge within 60 days of your reconsideration denial. This federal hearing process provides independent review outside the Social Security Administration. Level 4 is the Medicare Appeals Council, and Level 5 is Federal District Court. You might need an attorney for these higher levels. Now, let me share some critical mistakes that doom appeals. Don't file incomplete forms. Double-check all dates, income figures, and explanations for accuracy and consistency. Don't skip documentation. Simply claiming your income dropped isn't enough. You need official proof. Don't try to appeal non-qualifying events. Stick to the 8 approved categories. Don't assume automatic adjustments. Social Security doesn't automatically adjust IRMAA. When life changes occur, you must appeal. Remember, each spouse must file separately. Both need their own Form SSA-44 if both are affected by IRMAA. Here's a real example of what's at stake. Consider a retired couple whose 2024 income placed them in the second highest IRMAA bracket. After retirement, their income dropped below $206,000, but without an appeal, they're paying $458 per person monthly in IRMAA surcharges. That's $916 monthly, or nearly $11,000 annually in unnecessary Medicare premiums. The process works when you follow it correctly. As Jen Teague from NCOA warns, this is a rather complicated process. There are specific steps to follow, and Medicare lays them out. That said, there's a lot of legalese to wade through and decipher. Some final pro tips. Keep copies of everything you submit. Visit the Social Security office in person when possible. You can address questions immediately. Consider multiple-year appeals if your qualifying event affects several years. The IRMAA appeal process isn't automatic, and it's not guaranteed, but when you have a qualifying life event and follow the exact procedures, about half of all appeals succeed. That could mean thousands of dollars back in your pocket and significantly lower Medicare premiums going forward. The key is acting quickly. You only have 60 days from receiving your IRMAA notice and providing the specific documentation Social Security needs to verify your qualifying life event and income change.